What's up, guys? Welcome to another podcast, and today's going to be a short and sweet one. We're just going to talk about the fact that, yes, the Fed funds rate did go down 0.25%, but mortgage rates actually went the opposite direction. So the Fed funds rate, just so you know, is really just for short-term financing, mainly credit cards, anything that's tied to personal debt, whether it's your credit card, personal lines of credit, home equity lines of credit. There's a margin, and then there's also the prime rate that drops down with it. But when it comes to mortgage rates, that is more tied towards what the market and the bonds are feeling based on market conditions, based on what happens to the economy and so forth. So the reason why, even though they dropped 0.25%, I'm saying the Fed funds rate this last October meeting and mortgage rates actually went up 0.25% instead of down, is because of the comments that Powell made at the meeting. So what he actually said was they don't feel like the economy is doing as bad to merit additional rate drops in the next few months. So we still have a meeting coming up in December, and that one's going to be a biggie, because if that's the case, we are not going to see another rate drop for the Fed funds rate until sometime next year. What's really holding up all this is the government shutdown. There aren't very many jobs reports or reports in detail to give these economists and the federal governors enough information on how the labor market's doing. We actually just had a report come out today. It's basically looking like there's about 150-something thousand job cuts just in October, up from 54,000 the month before. It hasn't been that much in jobs cuts since October 2003. So what does that tell you? The economy and the jobs market is not doing as well, but because we can't really see it with reports because of the shutdown, we might not see the benefit for the next month or so. Because even if those jobs reports do somehow miraculously come out, they won't come out until probably December after the Fed's already met. So we're going to have to play this by ear. Rates still good, guys. You still can get a mortgage and FHA loan in the 5s, conventions on the 6s. So we're still in a good position, and it looks like some of the forecasts that were done at the beginning of the year are actually coming true, where conventionals are like at the mid-6s coming into the end of the year. They're still forecasting rates to be in the 5s. I don't know now with all this shutdowns what the push is going to be and what the timeline is going to be now. But again, just want to give you a quick information on, yes, the Fed funds rate did cut in October, but mortgage rates went at the opposite direction and why it happened. So, all right, guys, make sure that you keep an eye on us. And if you guys need anything, make sure to reach out to me. Here's my information down here, as always. See ya.